Welcome, guys, to the ARMR Report. This is a special bonus coverage version of ARMR Report. I'm your host, Brett Rosenthal. Those of you who know me, I usually on air at 11:30 Monday, Wednesday, Friday, and we share some thoughts off our trading desk. This is a live trading desk. I'm involved in a lot of action today, as you can imagine, but I wanted to take some time out to share with you some thoughts about the Cronos Group earnings announcement that came out this morning. There seems to be a lot of confusion around it, so I thought I'd just give you the key takeaways from the conference call with analysts and management this morning. Before I jump in, the usual comments. This is an educational show. I'm not telling you whether or not to buy Cronos today. I share with you information that I use in my own personal portfolio and hope that it elevates your process as you invest on your own and make your own choices. I will tell you today that I do not have a position in Cronos Group at the moment. So I have no axe to grind here. I'm not short, I'm not long. I'm just literally going to tell you what I learned from covering that conference call. And quite frankly, the only things that I think are necessary to understand from that call. So the print came out this morning, better than expected, carried on all the news wires. Stock's up 6% in the pre-market. Now the stock is down 3%. People don't understand why. A lot of talk on Twitter and those type of places of confusion, and the shorts pile on, the longs are confused. Let me just explain what's happening. These are the key takeaways you need if you're an investor in Cronos or if you want to invest in this stock. There's basically three things I'm going to share with you. I'm going to make this brief, and then I've got to hop off before the market closes here. Take care of business. But number one, analysts are struggling to understand the business model of Cronos. They're comparing Cronos to other growers in Canada, looking at the revenues and saying, this valuation's too high. That's a very static view of what Cronos is doing. And quite frankly, to me, it's a misinterpretation. They don't understand. So this is a short-term problem when it comes to weakness in the stock today. Anybody selling it today because they think the valuation compared to other growers in Canada is too high, they're completely missing the point of what Cronos Group is doing. It's a different business model than a grower. Cronos, CRON is the symbol. I assume you already know that. Cronos is situating themselves at the top of the food chain. They don't want to be a grower. Comparing their grow to other LPs in Canada is like the proverbial apple and the orange comparison. Let me explain. A grower's out there growing like ACB or APHA, right? They're growing and they're supplying the market. Cronos is buying extra cannabis to create higher end products with fatter margins. They're not looking to be a huge grower. They're growing on their own to support what they're doing, but they're buying product from other LPs. Okay? Over time, that leads to a much higher margin business model. Let me explain. Perfect example. To understand the food chain for cannabis, let's look at another cash crop and how it performed over 100 years. And that cash crop is sugar. Okay? Sugar cane or cannabis, it's all the same from the standpoint of you have to plant, grow, harvest, sell end product. So if you started off in the sugarcane business as a grower, you made money at the beginning when everybody needed supply. And then what happened was to those growers, a lot of them went out of business and only a couple remained at the end, big companies, because the asset was commoditized. So all you had in order to make profits on razor-thin margins was scale. And so all the small guys went out of business. Big guys joined forces, you only have a couple players at the end. This happens in every single cash crop. This is how it works when you're farming stuff. So what's the next level? It's guys who were taking sugar, which is the extract, right? They were extracting the sugar from the cane and putting it into a bag and putting it on someone's table in the early 1900s. And those guys did well for a while because they had higher value in the food chain here. They had a higher value because they were extracting sugar, packaging it, putting it on your table to eat versus a guy just growing biomass, okay? But then that got commoditized, right? Because there's not a real, there was no real proprietary intellectual property around extracting sugar from the cane. So the next level up the food chain is a company that figured, guess what? We're going to take sugar, we're going to put it in a glass bottle, in a carbonated beverage. We're going to have margins you can run a truck through, and we're going to sell it, right? 95% margins. Of course, that company was Coca-Cola, which turned out to be the best possible investment in the whole sugarcane move over 100 years. As an example, right? I'm sure there might have been other great investments out there. But as an example, for you to understand cannabis, just take a look at that business process. So where's Cronos in that value chain? They're trying to be at the top. They want to be Coca-Cola. They want to have intellectual property around the use of THC and CBD and all the other extracts in the cannabis plant. They're not a grower. They don't want to be a grower. Are they growing now? Sure, they need products so they can do these things. But ultimately down the road, as management said on the call, they're going to be buying product. By the way, there'll be a commoditization of the biomass. Prices will fall dramatically. And Cronos will be the biggest beneficiary of that, right? Because they're paying for supply. So when prices collapse, all of a sudden their margins go up. So when we see stories about how there's oversupply, it's commoditized. Don't forget, wait, that's the time where we're going to start to see earnings explosions for Cronos because the product they're bringing in to extract and create high-end, top of the value chain products, now they're getting biomass cheap. Okay, so to compare what they're doing now, their business model, to another grower is pointless. And this is just a typical confusion Wall Street has. Any new business that's starting out, people are trying to understand. I think there's Stifel Nichols, right? I think that guy had it right today. He put out a brokerage report, and I think he understands the model. Some guys get it, some don't. Okay? One last takeaway for you guys before we go here. One thing I heard on the call, very interesting to me. Those of you who know me know that Charlotte's Web is one of my favorite investments in the space. Okay, full disclosure, I own that stock. And what I heard on the call was very, very interesting to me. An analyst asked, what is the number one driver of revenue for Cronos in the next year to 2 years? And without hesitation, the CEO said the number one revenue driver will be CBD sales in the United States. That's the number one grower of revenue in the next year to 2 years for Cronos, which is a Canadian licensed producer of marijuana. And they're saying that their biggest revenue driver in the next 2 years will be U.S. CBD sales. And without a doubt, the best company in that business is Charlotte's Web. That's the sweet spot of Charlotte's Web. I expect to see some pretty phenomenal numbers out of this company over the next year or two, maybe even longer. All right, guys, I'll leave you with that. I hope it was helpful. I look forward to talking to you tomorrow at 11:30, my usual time. We're going to do a week in review. We got a lot to talk about, right? The market ripped lower and then has recovered and completely put a Band-Aid over that rip today. So we'll see where we are tomorrow. I'll share information with you directly off the desk like I do every week that reviews all the action we're involved in and what I think you need to know going into the weekend. Thanks for being here, and I'll talk to you tomorrow.